Hey, what's up, everyone? Marcus here with your not so weekly tax tip. And today we're talking about the brand new policy that's been getting a lot of attention. And that policy is no tax on tips, right? Sounds awesome, but let's slow down just a little bit. So, here is the big promise, right? So starting this year, if you work in a job where you get tipped, you might not have to pay federal income tax on up to $25,000 of those tips. Now, that's a big deal because in theory, this could save you up to $3,000 a year. Now, for many Americans that live paycheck to paycheck, $3,000 a year, that's extra groceries, gas, heck, maybe even a nice vacation, right? Now, let's talk about the fine print because you knew this was coming. There's a ton of fine print. So let's talk about what actually counts as a qualifying tip. So first, it has to be a voluntary tip, not a mandatory service charge. So if your employer automatically adds 20% to the bill, that may not count. Second, your job has to be on the Treasury Department's official list of tipped occupations. And so let's talk about that list. What does that list entail? Well, it is weirdly specific and it includes the usual suspects, right? Bartenders, servers, baristas, but it also includes wedding planners, tutors. Apparently tipping tutors is, I guess, now a big thing. Social media influencers, even plumbers. But here is the kicker. Even if your job is on the list, you still might be excluded if your employer is in the wrong industry. So what are these wrong industries? Industries like healthcare, law, athletics, or the performing arts. So I'll give you an example. So let's say that you're a singer who performs at weddings. Now, if you're hired by a casino to sing, congratulations, your tips might be tax-free. But if you're a self-employed singer doing the exact same gig, you're in the performing arts category. And guess what? No deduction for you, right? Same mic, same crowd, maybe the same duet, different tax results. You gotta love it. Now, there is also an income cap. If you make more than $150,000 a year, and if you're single, or if you make $300,000 as a married couple, this deduction starts to phase out. So the IRS is basically saying, if you're doing really well, we're going to go ahead and keep taxing your tips. Thanks a lot. And one more thing, the law only helps with income taxes. So you still get to pay payroll taxes, right? Social Security and Medicare on every single dollar. So this isn't a full tax break. It's just a partial one with strings attached. So what should you do right now? Step one, track your tips. Venmo, Zelle, Square, Cash, whatever you get, log everything. Step two, ask your employer what industries they're classified under, because if they fall into one of those restricted categories, you may be out of luck. And then step three, just adjust your expectation. This new law, it is retroactive for 2025, but don't expect your W-2 to tell the full truth. You'll likely need separate records when filing next year in 2026. So the bottom line, yes, no taxes on tips can save you money, but this isn't a guaranteed touchdown, right? It's more like being in field goal range, and you'll still need the right formation, no penalty flags, and a kicker who doesn't choke, all right? So remember, if you have any questions, let me know. We are the one advisory firm that knows the tax code, we know tax law, and we know tax theory, and our clients appreciate that. If you're not a client, please reach out to us. We are here to help you outsmart the tax code and keep what's yours, because the more you know, the less you owe. Until next time.